in the whatever study session last time, Wednesday, we did the second one, and we went, through fairly quickly, through the whole thing, right? So Foxborough Company, is the other one. So if you watch that video, you can see us do that one, okay? There were 4 people that make it, so we did it, right? So that might be useful for you, okay? And then we'll do this one today, and then we're going to have a quiz on it on Monday, okay? So I have the same wires by then. And like I said, there'll be, it's a 20-point quiz. This is right, so 20-point quiz for this, and then it'll probably be 20 points on the test. Do exactly the same thing, really. Just do it daily, okay? And then, I don't know, 15 points or something in the final, or 10, or I don't know, whatever, on the final, so. Okay? So, I would think you could probably get this thing done in, what, a half hour when we do it on next Monday? Those of you who've been working on it? That's plenty of time, isn't it? It really is. And then for the test, you should anticipate what? 10, 15 minutes, right? If you know how to do something, it's just do it, right? Boom, boom, boom. Do that, okay? All look so excited. You guys are supposed to be having the best time of your life, isn't it? What people told you, all the way K through 12, you're going to go to college and you're going to have the best time you've ever had in your life. It wasn't the first time your parents lied to you, was it? Yeah. Won't be well, it might be close to the last of the quite possible idea. So that's good. That's a good thing. So, I haven't lied to my kids in years and years and years. So, what for? Okay, anyway. I never lie to my grandchildren. Tell them they're perfect. It's true. Anyway, Eaton Company, is that the one we're going to do? What would you do first if you're doing this statement, guys? How about write down what? Eaton Company. Please be sure and do that, okay? So we'll write down, don't write down Eaton if it's some other company, okay? All right, anyway. Write down the company name. The balance sheet calls the balance sheet. If it's an income statement, call it income statement, right? This is a cash flow statement or a statement of cash flows, right, guys? Excellent. Okay, and is this 4-year ended or as of a specific date, seeing as we start with beginning cash and work our way to ending? It's just for the, you can move. All right, anyway, for the year ended, what is it, 12/31/2002, whatever. And you can abbreviate, but in real life, of course, it'll be written out real quick. Okay, so there's 3 sections on this thing, and they're upside down in terms of the order that you really do things. So what's at the top, though? I guess we think that's the most important, so we put it there. Operations. And if you think about it, operations is what? Running the business, revenues, expenses from the income statement, right? So we'll just take net income and plug it in there. Okay, that's going to be the first thing under operations, isn't it? Net income or net loss if it's net loss. Put brackets around it if it's a net loss. Would you agree that if every transaction was for cash, if you have net income, you have more cash? If you have loss, you have less cash? And that's all it is, okay? We're pretending everything's for cash. All right, anyway. And then we'll go down about half the page, and what do we have? Okay, we'll do investing. So pretend this is down about half the page. That's the way you set it up. Don't put them side by side. It's just the way it would work. And then you go down about a quarter page, right? So you're 3/4 of the way down, and you write finance. And you can remember the order of these, of course, because you get your financing first, then you do your investing, then you run your operations, right? So they're kind of upside down. That's okay. It's easy to remember. Go away. All right. I was at a presentation the other day, and somebody left that thing flashing for an hour. You can't get rid of it. So I guess it didn't bother. Okay. Anyway, so when we add these up, what are we going to get? These 3 sections, what are we going to get? We're writing down the change in every account in the balance sheet except for cash, and we are adding them up. What's it going to total to? How about the change in cash, huh? It's going to be the change in cash. It's either going to be the increase or decrease in cash. It has to be because you write down, debits equal credits, right, guys? You write down the change in every single asset, liability, equity account except for cash, and then you add them all up. It's got a total of the change in cash. That's all it is, okay? And then we take the beginning cash and add it to the change in cash, and guess what? That must be the ending cash. You guys are so angry with me now, nobody will even say anything. That's right. Okay, anyway, so here we go. Still making us do this stuff. In other classes, they let you quit working again. No, they do it the other way around. You do nothing for 10 weeks, right? Then you work for 6 or 7. Am I right? That's pretty much the way it works. Yeah. So, I know. I went to college. I was always amazed by it. I liked it. I was amazed by it. Okay, anyway. So, what do we do first? What's the easiest thing to do in terms of numbers? I don't think operations is easier. I think it's even easier than that. Cash, yeah, because I get the answer first, okay? But you can do operations first if you want. I don't care what you do first. You can jump all over the place in the balance sheet and write down what, you can memorize the statement, I guess. Crazy, right? Because they're all different a little bit, okay? And you write everything down and then put numbers. I don't care. What's probably the most efficient thing to do? If you wanted to maximize points, and you might run out of time on a final or on a test, and you probably won't on the final, but on the test you might, okay? You get more time on the final. But on the test, you might run out of time. What would be a really cool thing to do? Get 2/3 of the points. Okay? What are the fast ones to do? Write down the cash. And you're probably right. Write down net income. You know what goes first. It's all right. And then what else? If you do net income, though, be careful to do something else with it. What? Look for dividends. You bet. If you want to get retained earnings done and you don't want to do it twice, you don't want to do half of it. Right, guys? Discipline yourself a little bit on that. Okay? You guys know how unstructured and undisciplined I am. You've noticed, right? I clearly am. This is a piece of cake. All I got to do is concentrate for 5 minutes. Everything's easy if you can concentrate for 5 minutes. Right? Then you can relax and concentrate for a while and then concentrate again for 5 minutes. What amazes me is that people can concentrate for a whole hour. I don't think that's not really, right? They sit there and daydream and don't tell anybody they're daydreaming and pretend they're thinking about what they're thinking about. True? He's a teacher. He knows that's true. Does it himself. Okay, anyway, we all do. Okay, so you guys aren't any different. Anyway, so concentrate on this thing a little bit. It'll be fine. Let's write down the cash. What do we have at the beginning? 11 is beginning. What do we have at ending? What's the difference between those two? And that's a what? Decrease. Let's put brackets around it. And we won't say change anymore. What will we say, everybody? Very cleverly. Let's call it decrease, okay? Could either be an increase or a decrease. In this case, that's a decrease, okay? So we're good, all right? So that's a start, and points are building, okay? Maybe 4 or 5 so far, I don't know. All right, then what? You wanted to do net income next? Somebody said something, so, okay, let's do net income next. Where can you get that? On the income statement or in the retained earnings account, right? They gave you a T account with the retained earnings. You'd see it coming in there. Okay, anyway, so net income is 56. Right, now what account did we just start analyzing? Yeah, operations, but that's not an account, that's a section of the statement. Retained earnings, thank you. Okay, all right, retained earnings. You know what? You guys are getting better and better at this stuff, and I'm getting meaner and meaner to you. You notice that? You're going to see how I am in upper division classes. Intermediate, I just make fun of them all the time. Every time they make a mistake, it's over. Right? Wow. You're going to go to work and do that? Really? Are you kidding me? Right? So, it's fun, isn't it? Isn't it fun to know stuff? It's fun when this final's over. Know everything on it. Nail it. Yeah, okay, good. It's always like that. I like getting the paycheck, too. All the work's done, they give you a big paycheck, big bonus. Okay, retained earnings. I haven't had one of those in years. Retained earnings, what do we start with? 92. You guys know it's a credit? It's retained earnings, right? Ending. What did it go up by? 40. How much do we want to put on this statement of cash flows? 40. Got it? We already put out what on there? We already put the 56 for the net income on there, didn't we? Everybody agree with that? Well, we want 40 on there. So what else do we have to have on? Something else for 16. I don't have to tell you what the dividends were. What if I left it off the problem? You didn't know what it was. Could you figure it out? Of course you could. Okay? Just let yourself think, relax. Dividends are 16. Okay, and it says in the problem they were 16. That's nice. Okay, so, but what do you want to do? They don't have to say that. What do you want to do with that? Okay, all the activity that goes under operations is from operating the company. What's that? It's all of the revenue and expense. Well, we put the net income in when we did that, all the revenue expenses in there. What else? Current assets and current liabilities, right? Because they're for operations, that's why we have them. And maybe the net income, yeah, but what else? Maybe non-cash items on the income statement. Typically, there will be depreciation and amortization in companies, right? So we'll have that. And there might be other ones. There might be deferred income that's non-current. There might be a gain or a loss on refinancing debt or paying off a bond early. I'm not going to give you any of this stuff, but you'll see it on those statements, right? Okay? And there could be gains and losses on selling non-current assets, right? And that I will probably give you, okay? So, and there's one in this problem, right? We sold a piece of equipment or something. Okay? So you'll probably see those types of things, gains and losses. Okay, so, and that all goes under operations. What goes under investing? The non-current assets. That's what we invest in. If we buy one, we write it down. That's cash out. If we sell one, we write it down. That's cash in. You show both because they're big transactions, right? Everybody got it? When we're doing the non-current assets and non-current liabilities over there under operations, what do? We just show the change. That's because they're little tiny transactions and millions of them. How many times does Young Brands, not a good example, how many times who sells on account? How many times is a large company that sells on account? Debit accounts, receivable, and credit sales. Millions for small amounts. Got it? And then they debit cash and credit accounts receivable. So we just show the change in accounts receivable instead of all those transactions. How many times do they issue stock a year? Maybe not at all. Maybe once. Never more than that. Got it? A new issuance of stock. Okay? Got the idea? And retiring stock too, buying back treasury stock, same thing, right? Everybody good? Okay, so we're going to show both the increases and decreases where? Under investing and under financing. Oh, what's the financing stuff? Where does the financing come from? Where does the money come from that you start your business with? The owner's contributing capital, right? So any contributing capital transactions, right? What else? It might pay some of the earnings to the owners, and it would be a dividend, that kind of stuff, right? Okay, good. All right. So, what do you want to do with that 16 then? Where does it go? On financing. Why? Exactly. It's that simple. You don't have to memorize where everything goes. Don't do that. Your brains aren't big enough, okay? All right. So what are we going to do? Dividend paid, just like that. How much was it? Do I have more or less cash if I debited retained earnings and credited cash? Ah, so you can just use those journal entries, can't you? Kind of nice. Okay, good. All right. What do you want to do next? We did retained earnings.
So just to be clear, once we put net income in operations, we don't need to refer to retained earnings at all in finance?
No.
That's not correct.
You would not write down retained earnings anywhere. Okay. What I've done is I've explained, that's a good question, I've explained this 40 change here by writing down the net income of 56 and the dividend of 16. The difference between those is 40. You got it. Credited equity, retained earnings by 40, right? And debited cash for 40 here, right? Next. Very good question. Okay. Does it matter which account we do next? No, but don't sit and flounder. Grab one and do it, okay? I don't care. I don't care if you want to do plant and equipment first. It's okay. It's harder. I like to get the hard stuff out of the way if that's the way you feel. Do it. I don't care. Doesn't matter. You know where everything goes in the statement, don't you? So you do them in any order, whatever occurs to you. If you get stuck on something, what do? Do something else. What do you do at work if you get stuck on something and your boss is gone? By the way, that's going to always happen. You guys are going to be well educated, sort of. When you leave here, you're going to be pretty well educated. And they're going to give you something to do, and then they are not going to watch you do it. They have time to watch you do it. It's ridiculous. And then they're going to leave, and they're going to go to a meeting, or they're going to go to another location, or they're going to leave the country. And then they're going to say, well, just get whatever done you can get done, and I'll work with you and answer your questions when I get back. See you next week. I'm not kidding, right? And what do? Every possible thing you can figure out, right? And what do you do with the stuff you can't figure out? Make a list of questions, have one list. Right? And when they walk in the door, you pull your list out and you set it down and you say, I have 80 questions. And you're gold. I'm not kidding. Instead of, you have to call them every time and ask them questions. You're nuts. They can't get anything done themselves. Okay? So this is real, you guys. Just get something done. Do that on the final, please. Don't panic, right? Do that on the test. Don't panic. Instead, what do you want to do? Find something you know how to do. Do it. Get it right. Please do this in all your classes. Do it. Get it right. Build your confidence, and then what's going to happen? You're going to have a whole bunch of time left, and what? At the end, whole bunch of time left in your finals, and you can take all that time to figure out the thing you can't remember, or that you can't do. Works every time. Just works every time. And the reason I like to emphasize that is it works at work, too. Get your confidence up, feeling good about yourself, and guess what? You can figure anything out. Okay, well, maybe, or not. But it won't matter if you get a lot of it right. Okay, anyway, where do you want to go next? We got a check mark next to cash. We got a check mark next to retained earnings. What do you want to do? Accounts receivable sound all right? I don't care. All right, so that's where I'd go. What do you want to do? Changes in the current assets. If a current asset goes up, pretend you bought it with cash. If it goes down, pretend you sold it for cash. Not literally true, but it has the same impact. Current liabilities. If a current liability goes up, what'd you do? Borrowed money. You have more cash. If a current liability goes down, what happened? You paid it with cash. You have less cash. It's that simple. Okay? So accounts receivable went up by how much? 80. Increase in accounts receivable. I did not collect a bunch of my sales, so therefore I have less cash by 80. It's true, right? The sales in the income statement are bigger than the cash you received. That's all we're doing. Okay? The next one, putting a check mark next to it. The next one, inventory. What happened to it? It went down by how much? 35. Guess what? I sold inventory, I have cost of goods sold, and it used up no cash because it used up inventory. And I did not replace the inventory, so I have more cash. You don't have to go through that whole process. What can you say? I sold it. Cash. Okay? Got it? Good enough. All right? Prepaid expenses is next. I have two more. Guess what you bought the prepaids with? Cash. So it's debit, prepaids, credit, cash. Remember, I'm writing down what happened to cash here, not what happened to each one of the asset accounts and liability and equity accounts. Right, guys? We're writing down what happened to cash. That'll screw you up, too. If you get those backwards, it'll go crazy. All right, put a check mark next to prepaids now, inventory, too. All right, so then let's go down to the current liabilities. Why not? Because they're easy. Accounts payable, what do we want to do? It went up by 75. Guess how much money you borrowed? 75. Guess how much more cash you have? 75. Okay? So increase in accounts payable. Did you notice that these are exactly the opposite of what's happening with the current assets? Yes, if I buy a current asset, I have less cash. Right? If I sell a current asset, I have more cash. If I borrow money, though, I have more liabilities, I have more cash. Liabilities are credits. Assets are debits. This is going to work, isn't it? Right? Stuff you already know. Just let yourself use it. Okay? All right. And then what's next? Accrued liabilities? Go up or down? Accrued liabilities. Down. What's that, 10? What do you bet we paid him with cash? I have less cash. Debit, accrued liability, credit, cash. You can think of the debit and credit. You can. You guys aren't going to blow this, are you? Right? Getting perfect. Okay? The folks who aren't sitting here are going to get zeros, and you guys are going to get 20s. Like that? That'll help your grade. Still, it's always a curve. It's a curve against everybody you ever had for this class. It's thousands of them, right? Thousands of kids. Okay. Yeah. Young adults. That's what you guys are. Yeah, I guess. Okay. You're adults. Isn't that awful? You get here, you're 18 years old, you've been a kid all your life, and suddenly everybody says, oh, you're an adult. Get to work. Sucks. Okay. Anyway, I'd like to be a kid. So now what do we got? Grab another account. Want to do plant and equipment next? Be all right? We've got the current liabilities done. Doesn't matter what order you do them in. What account goes with plant and equipment? Accumulated depreciation, right? And depreciation expense. Everybody agree with that? It's true, isn't it? Those go together. It's the contra asset. What's in plant and equipment at the beginning? 420. And why am I writing down T accounts for these? Because they're a little more complicated, and the T account kind of helps me keep it straight, huh? Why didn't I write down T accounts for accounts receivable, inventory, prepaids, accounts payable, and accrued liabilities? Because they're simple. I don't need to bother. If you want to write one down, feel free. Okay? But all we're doing is we're taking the change, right? Okay? So what's the ending property, plant, and equipment? What's the minimum amount they must have bought? 80. It went up by 80. Could they have sold some too? Yeah. So you could have some bought, and you could have some sold. You don't have to have any sold, but I bet they have some bought, right? If there's none sold, how much did they buy? 80. You know how this accounting stuff works. It's simple, isn't it? It's amazing they pay you well for it, right? You know that. Most people don't. Okay? So what do? Accumulated depreciation is what? 70? And it goes up to 85? What would that tell you? How much must be depreciation expense minimum? 15, because the account went up by 15. But what might you have done? You might have sold off some assets or retired some, given them away or something, right? Okay, if you did that, what will you do? You'll retire the depreciation too. You guys know this. So it'd have to come out of here, wouldn't it? So if if you sold some, you got rid of some, your depreciation expense must be more, right? Very good. Not a big deal. Okay, so what do they tell us about it? It says they sold some, right? It says the company sold some equipment for 18. 18 of what? What do you think they got? Cash? Maybe? Yeah. Journal entry would be debit cash 18, I bet you anything. Do you want to put that 18 on your cash flow statement? Well, yeah, it's 18 of cash that came in, right? I'm going to put it on there. Okay, and then it cost 30, so where did it come out of? That 420 included 30 that's no longer there. Everybody agree? It's true, isn't it? Okay, so let's take that 30 out of there. That's going to be credit, plant, and equipment. Probably be separate accounts, of course, for all the different types of plant and equipment. Okay, 30. And there was accumulated depreciation of 10, included in that 70. Beginning accumulated depreciation is 10, right? That belongs to an asset we don't have anymore, so we're taking it out, of course. We did this, didn't we? It's just connecting what you already know. All right, now does that journal entry balance? No, because it's a what? What was the book value of this thing? Well, 30 was the cost. 10 was the accumulated depreciation. What was the book value? 20. What'd you sell it for? 18. What happened to you? You lost 2. Would a loss be a debit or a credit, seeing as it reduces retained earnings? Net income and retained earnings. It'd be a debit, wouldn't it? Absolutely. So the loss on sale would have been a debit. Everybody's got this, right? What if I sold it for more than 20? It'd be a gain, and the gain would be on the income statement. Now here's the deal. Take a look at the income statement. That loss on sale of equipment is 2 on there. This net income of 56 up here is reduced by that loss. But what we're going to do is we're going to take this 18 cash and put it where? What kind of an activity is this, you guys? Investing, you bet. It's investing. Why? Because it's a non-current asset, and that's what we invest in. So I'm going to say sale of equipment for how much, gang? 18. Is that a debit or a credit? Well, of course it's a debit. The cash, right? More cash. So it's positive. Okay, so 18. But I want to explain the whole 20 change, don't I? Well, what I've got is I've got 18 here, and I've got a reduction of 20 over here. I've double counted the 2 lost. That makes sense? In the net income, that 2's in there. In the 18, that 2's in there. I don't want to double count it. And I want to leave the cash I actually received under investing. That makes sense? So what I'm going to have to do is what? Add back the loss. Okay. Now this loss that I'm adding back on a sale of equipment, right? It doesn't mean that's a source of cash. It's just I don't want to double count it. The income should have been 58 without that in there. You got it? So I add the 2 back. That's what we're doing. It seems backwards, doesn't it? It drives you crazy. A loss means I have more cash? No. You just took the loss out twice. Okay? So you put it back. Everybody got it? So hopefully it won't drive you crazy. All right. What else do we need then? Look at plant and equipment. It was 420. We took 30 out of there. It's 390. Now it's suddenly 500. What must have happened? They must have debited for how much gain? 110, isn't it? What do you think that journal entry would be? How about debit, plant, and equipment, right? For how much, guys?
110.
110. And we pretend everything was for cash. In real life, we don't. If it was a mortgage, we might list a non-cash transaction at the bottom of the cash flow statement. We could do it that way if we want. We financed it with debt, right? You could do that. For our purposes now, we'll assume that they borrowed them. If they did borrow money for that thing, we borrowed the money separately and then bought it. So, or we just used our own cash. So what do you want to do with this one? Look at that. Cash out 110. Where do you want to put it? Non-current asset and investing. So this is what? Purchase. And they didn't tell us what it was, so I guess it's purchase of plant and equipment. Got it? 110. Do I have more or less cash if I credit it? Well, I think it's less. Are you guys? About the equipment or building or whatever it is. Okay, land maybe. All right, and then there's one other thing going on here. Take a look at accumulated depreciation. We've taken care of plant and equipment. You can check it off now, couldn't you? Okay? What about accumulated depreciation? It starts at 70. We took 10 out of it. It's 60. And suddenly it gets up to 85. How much must you put in? Just too exciting. Okay? This is good stuff. Wow. You should like this. Once you understand it, it's easy. And here we are at the end, giving you all kinds of points for something that would have been impossible when we started the class, and now it's a piece of cake, huh? Right? Kind of is. Should feel good. So what are we going to do with this? What's the journal entry for recording the depreciation? I think it's credit accumulated depreciation. How about you guys? Of course it is. What's the debit when you record depreciation? Debit depreciation expense. Excellent. That's it. For how much? 25. In the problem, on the income statement, do they show depreciation expense? No, they could. But a lot of times the depreciation will be mixed between cost of goods sold, if they're manufacturing the product themselves, and it'll be in operating expenses. And here they didn't give us the detail of the operating expenses, even if it is there. But it's got to be in there somewhere, right? It's in the income statement somewhere. And that 25, though, did they tell us anything about it at the bottom? Did it tell you how much the depreciation was? No. What do we have to do? Calculate it, right? So that one we just had to figure out ourselves. Right, guys? No big deal. With any of these T accounts, where there's a beginning balance, an ending balance, and a debit and a credit, if I leave out one of those numbers, can you figure out the fourth one? Can you figure out that one? I'm sorry, if I gave you three of them and I leave out one, can you figure out the one I left out? Every time. Remember that for the final, okay? Do it over. Okay. Deferrals and accruals, it's a lot of what it is. Making adjusting journal entries, it's a lot of what it is. You know what the balance is, you know what you want it to be. Make a journal entry, right? Okay. All right. So we've got that one. Now you tell me how much cash is in that transaction. None. So you might think, well, then it doesn't go on the statement. But it does, right? How come? Included in the income statement is $25,000 of depreciation expense, right? That net income of $56,000 has $25,000 taken out of it that was not cash. And I want to find out how much cash came from operations. So what do I need to do? Add back the depreciation and amortization. In this case, I guess we just have depreciation. Okay? 25. I'm going to add it back. It doesn't mean depreciation is a source of cash. It means it isn't a use of cash, right? It didn't go out. Is it still a real expense? Do you think it's a real expense for UPS to use up their trucks and airplanes? Oh, yeah, it's a real expense. There's no problem with that. It's just not a cash expense. When does the cash go out? It doesn't even go out when they buy the airplanes. When does it go out? When they pay for the airplanes, right, guys? Okay, and the cash flow statement would show that, by the way. Got it? Okay. The depreciation expense reflects using them up. Okay, so now you can check off that one. Well, I think we're done with it. Oh, we got long-term investments. I take it back. Does it say anything about the long-term investment down below? Yeah, long-term investments, they sold them, didn't they? So I guess we'll have to get a little more room here. The long-term investment they sold. So what would that journal entry have been for the long-term investment? They sold it for 12, so what would that be? Debit what? Cash. Do that. What did it cost them when they bought it? And this would be a long-term investment in available-for-sale securities, probably. What do you bet? Something like that. Okay. Unless it was an equity interest, and then it'd be an investment in affiliate, whatever. Okay, right, guys? Okay, so 7. Gee, what did that do for them? Okay. These are simpler, huh? Gain on sale, right? These are simpler because there's no depreciation on this kind of stuff, right? Okay, so sure. We got a gain of 5. Look at that income statement. There's the gain. What do you want to do with that? I want to show this cash someplace. Where do you want to show it? Financing. You bet. Whoops. Investing. This is an investment. What kind of account is investment? It's an asset. Where do you want to put the asset? We invested in an investment, guys. It's investing. Okay? All right. Sure. Okay. Threw me off. Okay. Anyway, so what do you want to do with this? Sale investment, like that. Sale of the long-term investment, okay? And how much? What do we sell it for? 12. I want to put the whole 12 in there, don't you guys? It's debit cash 12. But how much did the account change by? 7, which is the 7 we took out. Everybody agree with that? Now here's the deal. Did they buy any? Apparently not. Could they have bought some? Could they have bought 20 and sold 12? Sure. The account would have gone up by 8. Okay? So obviously, all that happened was they took the 7 out of there. Okay? So good. But what do we want to do? I don't want to show 12 on this cash flow statement. I just put 12 on, but I don't want 12. How much do I want? How much did the account change by? 7. So all I want to put on there is 7. How do I do it? I pick up the cash and do what? Subtract the gain. 12 less 5 is 7. I'm brilliant today, huh? All right? That's it. Okay? So here we go. What we're going to do is deduct gains. It looks so backwards, doesn't it? I'm deducting gains and adding losses. This is crazy. No, it's not. I want to show the whole 12 over here, so I have to deduct the gain. I want net income from operations, not net income including gains and losses on selling investments, selling equipment. Got the idea? That's all we're doing. Okay, good. And why did I add back depreciation? It's because it's not a cash item. There can be other non-cash items in real life too. The statement gets kind of long sometimes. Okay, for a big company. All right, good. So now you can check off long-term investments. What have we not done? Non-current liabilities and equity, right? So let's do it. What do you want to do next? Oh, by the way, where are we going to put those? Non-current liabilities and equity, where does it go? Which section? Financing, because that's where the financing comes from. Equity holders and debt holders, right? That's common sense. All right, so let's give it a shot. Okay, so what do we want to do? Bonds payable. Bonds payable started at 170, and it went to 195. And down below they told us nothing, right? So what must have happened? They must have increased it by 25, and that means what? They debited cash 25, and they credited bonds payable 25. They borrowed 25, right? 25 million or whatever this is. Okay? Thousands. Right, guys? That's it. Could they have borrowed 100 and paid back 75 and still have to increase to 25? Of course. And what would we do if they had borrowed 100 and paid back 75? We would show 100 cash coming in, and we would show 75 cash going out, right? We showed on 2 separate lines. Why? Because they're big transactions and not very many of them, right? But all that seems to have happened here, because they didn't tell us anything in the problem, so what's our assumption going to be? They issued 25 in bonds. And where do you want to write it? It's financing activity. How about, say, issue bonds? Okay? Right? Debit cash, credit bonds payable. Okay. Pretty good? It is. I have more cash. Okay? Now you can check off that one. Let's skip deferred income taxes for a second and come back to it. Okay? Common stock. What happened to it? Common stock's a weird one here. This one's strange. It decreased. And this problem is a little strange. It's 200 and it went down to 160. What do you think happened? They bought back stock. It'd probably really be an increase in treasury stock. But here's what you can do. You can buy back treasury stock, and then you can cancel that stock, retire the stock, and take it out of common stock. So maybe they did that. So it's kind of a strange problem. If common stock went up, what would you assume? They issued stock. If common stock goes down, what would you assume? They retired stock, huh? Sound good? Okay, so what do I have, 40 here? It's debit common stock, debit an equity account, and credit what? We pretend everything went through cash. This we probably did, by the way. Okay, so common stock. Where does it go? It's where the financing comes from to run the business, right? Equity and long-term debt. So retire, maybe? Common stock. And I'll be real flexible in the terminology you use. Don't just say reduction in common stock, right? You know, retire it, buy back, something like that, okay? All right, so how much, 40? Do I have more or less cash if I debited common stock or credited cash? Aren't you glad you learned debits and credits? Okay, anyway, that's easy. All right, good, so that one's done. Oh, and we already did retained earnings, didn't we? Do you want to do it again? That was your question. Is this a common mistake? Yeah. People will show net income, they'll show dividends, and they'll give you the change in retained earnings too, and then they can't figure out why it doesn't total. Kind of humorous. But under pressure, could that happen to you? Yeah. So what do you need to discipline yourself to do? When you do an account, put a check mark next to it. If you put a check mark next to retained earnings, you get down here, it's the last account, and you look at it, and there's a check mark next to it, will you leave it alone? Then more likely. Okay? Right? Don't put it out there again. All right, so I left out that deferred income taxes, didn't I? Okay. Here's the deal with deferred income taxes. Well, first, what is it? Didn't cover this very much. It was in the liabilities chapter. Remember, they had deferred income taxes. They talked about income taxes payable and income tax expense and deferred income taxes a little. Let's give ourselves a little more room to work here. Okay, let's do deferred income taxes. How might this stuff work? I kind of just save this to here a little bit because it kind of almost makes more sense here. Can you guys tell me how much income tax expense they have on their income statement? Yeah, it says less income taxes, right? How'd they get income tax expense, that less income taxes is income tax expense? How'd they get that amount in that account? What did the account start with at the beginning of the year? 0. Why did it start with 0? Because it's an expense account. You close them to start over. You guys know that. Okay, so how would they get 24,000 or million or whatever that is? How do you get the 24? They debited it, right? Income tax expense. You like it? That's an expense account. I know they didn't say expense there. They don't have to. Less income taxes. Everybody knows it's expense, right? You guys know. All right. What would they credit income tax payable for at that time? And what would they do with the rest of it? Oh, there is deferred income tax payable. What is that? I am recognizing, which means recording, right? Recognizing on my financial statements, 24,000 of taxes. But how much am I going to pay? What am I going to realize in tax? What am I going to pay in taxes? Well, actually, I don't have to pay some of it right now, I can tell, because deferred income tax went up by how much, you guys? It went from 63, deferred income tax payable, goes up from 63 to 71. How much did it go up by? 8. I know they credited that account by 8. What the deal is I don't have to pay the taxes until some future year. Interest-free borrowing from the federal government. Would you like that? Nice deal. How did that happen? On their tax return, they're putting depreciation based on modified accelerated cost recovery system. There's other differences too, but this everybody has this one, right? Any equipment or building at all. You use modified accelerated cost recovery system. You read about it real briefly, right? If you do a tax class someday, you'll learn about it a lot. Okay. Deferred income. What happens to deferred income tax comes from I'm putting a whole bunch of depreciation expense using makers on my tax return. Makes my taxable income on my tax return be a lot less than what? Oh, I'm using straight line on my financial statements for depreciation expense. So it's a lot less in the early years of the life of the asset, building equipment. So what happens? I have more taxable income on my financial statements, pre-tax income, my income statement, than I do on my tax return. So I end up paying the government a lot less taxes than I show as tax expense. Now, is the tax expense really 24 here? Yes. You're going to have to pay it someday. But 8 of it you're paying some time in the future. When's that going to be? When you retire those assets, right, that you're depreciating, or late in their life. If you don't replace them with new assets, what happens? You have to pay the tax then because you don't have any depreciation on your tax return anymore. Right? That makes sense? You'd still have it on your financial statements. Okay? So what do companies want to do, of course? They don't want to pay that tax. What do? They buy more assets. What would the government like to have happen? Companies buy more assets all the time and just keep going. It used to be all the assets were made in the U.S. though, and it really promoted the U.S. economy. Now we have more of a worldwide economy. Who do we buy most of the assets from? Actually, we still buy most of them in the U.S. Not most, but the majority of the U.S. We manufacture all kinds of stuff in the U.S., you guys. We just manufacture a smaller percentage than we used to. Right? It's amazing if you want to buy clothing, huh? How many of you have bought any clothing manufactured in the U.S. recently? You see, if you try to, you can find it, can't you? It really does exist. Honest, there's some. How many of you think you're wearing something made in the United States right now? Not me. None. Gift of conscience. Anybody have something made in the U.S. on? Anything? Wow. It's amazing, isn't it? Right? Were those tables made in the U.S.? Maybe. I don't know. Probably not. This building was put up in the U.S., so we know the construction was done here. We didn't bring this in as a building and set it down. Maybe someday. Yeah, okay. So, that's fun. But you'd be surprised with how many things are made here. Luckily, bourbon's still made here, right? Yeah, I saw, did you guys see that Bacardi bought Angel's Envy? They're putting a new building downtown for Angel's Envy. There's this guy, he died unfortunately, but he was a really great distiller, and he made Angel's Envy, and the bourbon's pretty good. It's new. The bourbon's pretty good, but their rye is just unbelievable, winning all kinds of awards, and he died. What a horrible thing. Yeah, but anyway, so his son took it over, but nobody knows if his son can do this or not. Probably not. He doesn't have the years of experience. And so anyway, his son just sold to Bacardi, though. So they did fine. They built this incredible label, right, this great reputation. So we are going to have a rum company downtown, Bacardi. It's going to say Angel's Envy on it, but it's going to be Bacardi, right? Is Bacardi a U.S. company? I don't know. It's amazing. When you start getting really into businesses, they just built that bourbon experience downtown. Who is that? Williams? What is it? Evan Williams. Yeah, it's kind of cool. They don't get any bourbon, but that's all right. It's good for tourists. We don't want to drive around drunk anyway, and so the law won't let them, by the way. So they give you the 3 little tiny sips. But still, when family come from out of town and stuff, great place to take them. They can find out about bourbon without having any bourbon. Most people don't like it anyway, which is less they drink it for a while. But anyway, one of those things you start doing for no reason. But anyway, we're kind of that way with all alcohol, aren't you? First time you had beer? It was great, wasn't it? Yeah. But after a while, not so bad. But too bad. Anyway, we're going to have, on the Evan Williams, what I was going to say is, when we went through the tour, the fellow I was with says, how many brands do you guys have? And the person that was, selling their stuff in the gift store says, I don't even know. He says, I think you can find it online. So I did. I think it was 135 different companies they bought up, right? So there's only a few. There's only a few companies that own all of them. And the economy's that way with most things now. There's lots and lots of small businesses. You know what your best strategy is for making a lot of money on a small business? Start taking market share away from big companies. And what will they do? Buy you and make you a multimillionaire. Will you become a multimillionaire running your company? Probably not. But if you can hurt them a little bit, they'll take you out. It was really fun. I told you about did I tell you guys about the client that we had when I was in Tacoma with Briar Family Coles at the CPA firm? What they do is start restaurants. Did I mention it to you guys? Yeah. It's really a cool thing, right? Another one that's real common nowadays is people start banks. You notice there's little banks pop up all the time. People that understand the banking industry have worked in banking for a long time. They start banks. They build these banks. And then they start hurting the major banks, right? Because they're real lean. They don't have a lot of administrative costs. They don't have expensive salaries at the top of the business, basically, right? So their costs are real low. And then they provide really good customer service and stuff. Guess what the big banks do? They buy them. And then guess what the people who started that bank do? They start another one. And then what do the big banks do? They buy them. Oh man, it's really a wonderful business. Isn't that cool? So there's all kinds of ways to, make small businesses work. It's okay. It happens with all sorts of restaurants. Most of the restaurant chains started as little tiny things. Some of them, the people that developed it actually started the restaurant. Most of them, that's not true. They buy up the competitors, right? The big companies don't want the competition from the little ones, so take them out. So take them out and give you a lot of money. Yeah. That's cheaper than, by the way, than aggressively forcing you out of business with unfair competition and things like that. What's this 16 over here, you supposed to? It's not cash yet. It's probably what? Income tax payable, right? At the end of the year, they haven't paid it yet. But then what do they do after the end of the year? And what must they have done in this company, because there's no income tax payable? If there's no income tax payable left on the balance sheet, what must they have done with that? Paid it. What would that be? Debit income tax payable. See it? And credit what? Cash. So it ends up coming out of cash. Okay? So here's the point. We have income tax expense on our income statement of 24. We only paid 16 out. Oh. So what do we have included in net income up here? We got the 56 net income up here. What do we have included in it? We had included 24, was it, of tax expense? How much was actually paid? 16. So what do we need to add back that was not paid out? 8. Got it? 24 less 8 is 16. Great math skills again. Okay? All right, so what are we going to do? What the author does, I should have left a little room, it didn't. They add the increase in deferred income tax payable. Got it? Of 8. Okay? What you can do if you want is you could put it down here under financing. I'd go with that because it's a long-term liability, really. But most people show it up where the author did, that 8 up here. So take a look at the answer on the back of that page. And where did they put the increase in deferred income taxes? See it there? It's under operating activities. Everybody good? So now what do you do? Oh, by the way, check off that account. We've done every single account, haven't we, guys? What do you do now?
Add it up.
Add it up. That's it. When you add these up, I'm going to call it, you can take a look at the answer there. What does it say? Net cash provided by operating activities. Total operating activities, you could say. Okay? Cash flow from operating activities, something like that. It adds up to 104. We did everything right. I think we did. Then cash here, what do we got? Total cash flow from investing activities. Got the idea? Something like that? And it's 80 negative. Yeah. And then we've got total cash flow from what? Yeah. Financing activities. Total cash flow from financing activities. And how much was that? 31 negative, right? Cash out. What's 104 less 80 less 31? It's -7. We're brilliant. And we got all the points. What's more important, to know this or to have the points?
Yes.
Oh, let's be short-term decision makers. Let's have the points. Make money with it later.
We know what answer you want to
See you guys.
Yes.
Honest.